microphone it's using. There's a way I could do that. Sorry, guys. We will. Oh, there we go. Okay.
Can you hear me?
Yeah, I can hear you. Can you hear me?
Yeah.
We're all set then.
Okay.
Okay. All right. Okay. So we're going to start today the way that we usually start a new year with WebWorks. And I will pretend to be Mike Jackson, and you guys can ask me some questions that you might have found in your review of the 2019 financial statements of WebWorks. So please feel free. And then, of course, I'll post all the answers once we finish. No, yeah, I'll post the inquiries just like we always do. Yes. I know you guys have all been, okay. So actually, sadly enough, Mr. Cullen passed away during the year, and his family decided not to pursue the lawsuit. So I really wasn't sure what to do with that. If we needed, since we recorded a loss last year, if we needed to record some kind of gain this year, I wasn't sure. Obviously, we don't want that $50,000 sitting there, but I didn't know what to do with it. So I hope you guys can help me figure out what to do with that. Well, I guess this year we can say that it was COVID or something. How about that? If we can't laugh every once in a while, we'll just cry, right? I know I don't know, I'm about to cry. It's about this, not you guys. You guys are fine. But my freshmen in Management 2200, they're struggling. So I kind of want to cry a little bit. So we'll have to laugh a little bit. But somebody in here may have lost somebody to COVID. So please, I'm not making light of it. I really don't know what he passed away from. Actually, nobody's ever asked me that before. So I can't think of anything that's safe because somebody may have lost somebody due to that. So we'll just say he passed away. Okay. Next question. Yes. I will give you all of the details of the pension plan. It was really just that Rachel and Jake, their employees have been very loyal to them, and they wanted to do something to acknowledge that. And they felt like a pension plan was a good way to do that they could help protect their employees. It also will encourage the employees to stay because they do have to get vested in the plan. So hopefully they'll stay with us. And of course, it's a long time till anybody retires. And so we don't have to worry about that for a long time anyway. But I know you guys will help me figure out what I have to do. Tyler? Sure. Let's see. And I'll get this up in 1 second. I know you can't see it, neither can Kyle. Let's see. Although you guys have the journal, so that's all I'm doing is opening that. Okay. And I'm going to share my screen with you, Kyle.
Will it pop up on the share chart? Oh, never mind. There it goes.
Got it. Yes, cool. All right.
Got it.
Okay. All right. So let's look at insurance. That should. All right. So the original. Okay. So the original balance in prepaid insurance was $700, and you guys know I messed that up the first year that we did it. But ever since then, I think I've been getting it correct. So basically, I know that whatever is in my prepaid insurance at the end of the year, as long as I've done the insurance expense accrual correctly, I know that that's my last month of the cycle because the cycle runs from February 1st to January 31st. So whatever's left in prepaid insurance on December 31st, that's the January insurance expense. So I'm okay with, I mean, I know that. Hopefully that's right. So then, insurance goes up every year, as you can imagine, especially after the whole Cullen thing. So in February, you guys couldn't see that. Okay. So in February, prepaid insurance this year was $12,000. So that's $12,000 that's going to run from February 1st of 19 to January 31st of 20 is what that was for. So when I went to do my insurance expense accrual, search for it, but it's just, there shouldn't be that many things to look for. Payment, and like shop equipment, utilities. There it is. Okay, so basically what I did was I took the $12,000 that we paid for 2/1 to 1/31, and I divided it by 12 months. So that gave me $1,000 per month. So from so January's expense was $700, and then February 1st to December 31st was $1,000 for each of those months. So that's 11 months at $1,000, which is 11,000 plus the 700 for January, so 11,700. So that leaves 1,000 left over for January of 2020 that we'll expense next year. Does that sound right? Okay. I think I did it right because I've been following whatever you guys told me to do that first year. Okay. So I think that one's right. Okay. What else? Yeah. Meacham. Yeah. So Meacham. Okay. So I got to tell you guys this whole story. It's like so, oh, it's so long. Okay. So you remember last year in 2018, Jake and Rachel had been talking about the fact that they wanted to start maybe selling inventory because they feel like that's a real that could be a real revenue generator for the business. So they're so smart. They're always thinking about how the business can grow and can generate revenue. So they decided that they didn't really know a lot about that side of the business though, based on what the two of them had done in their previous jobs. They really had only done the service side of the business, the IT security and website design and all the fun stuff that they do. So they felt like they needed to kind of get some experts in on that so they could learn how to do it. And that's where Claiborne came in. So you guys remember that in January of 2018, they purchased 25% of Claiborne. And I know I messed that up. I'm sorry. But I remember you guys telling me that really qualified as an equity method security because Jake and Rachel, there was a relationship between WebWorks and Claiborne, and Rachel was sitting on the board of directors, and there was a strategic purpose, and they owned more than 20%, and so I remember all that. So the problem is, throughout the year, it became really apparent that Claiborne was not the type of business that WebWorks wanted to be associated with. Sitting on the board of directors, Rachel saw some things that she was uncomfortable with in the management style of Claiborne. So they have decided not to continue that relationship, and they're basically just looking for a buyer for their 25% of the shares of Claiborne. I don't know if I'm supposed to change something with that. You guys will have to help me with that because I really didn't know. So, but they still have the desire to sell inventory, and you'll see that we did start selling inventory this year on a small scale, but we really wanted to do it on a much larger scale. So they decided they spent their year kind of looking at other companies, and this time being a little bit more deliberate about which company they chose to partner with. And they found Meacham. Meacham's out of Birmingham, Alabama, which is a market they hope to get into anyway, because it's pretty close to Atlanta. It's a major market. It's a major market, pretty close to Atlanta, and so they definitely want to move in that way anyway. And it's a family-owned business, just like WebWorks is, and they just have a great reputation. So they purchased I think it was 40% of the stock. Yeah. So there's basically it's owned by 4 siblings, and 2 of the siblings own 30% each, and 2 of the siblings owned 20% each. And the 2 siblings that owned 20% each were ready to sell and get out. They didn't really want to be a part of the business. So WebWorks purchased their share. So they're basically, it's just them and the 2 other siblings that still own 30% each. So they're really very pleased with this whole relationship, and they think this is going to work out. So I guess that qualifies as an equity method security based on what you guys told me last year, but I don't remember how to do the accounting for it. So hopefully you can help me figure out what to do with Claiborne and how to account for Meacham. What else? Yeah. All right. No, I just recorded 40%. The dividends that the Meacham paid during the year were $10,000, and I recorded 4,000 for us because that's 40%. But I don't know if I did it right, so you guys can help me on that. I mean, I know I did the amount right because that's a check. We got the check, right? But I'm not sure if I did the rest of it right. Nope. Yeah. Okay, so to finance the Meacham purchase, Jake and Rachel issued bonds somewhere. Yeah. They issued bonds, and they were $80,000 worth of bonds, but we only were able to sell them for like $76,000. Yeah, I wasn't sure what to do with those. So maybe you can help if I didn't do it correctly. I did record the issuance, and I recorded the interest payments, but you know. Anything else? Yes, that's okay. That would be the amount that we earned designing websites and doing security, IT security, and all that stuff. That's total, yes. Yeah, you can see their revenues have just been really increasing a lot over the past 4 years. What did we start with? 120? So they've been working really, really hard and growing the company as quickly as possible. Anything else? Mm-hmm. Oh, okay. Well, we can look at it. All right. Let me go ahead and open up the inquiries. Okay, so if you refresh your connect page, it should be there. Kyle, it should be there for you too. I mean, I'll post it up here, but you should be able to see it. It's a document that's at the very end of the year. You okay, Kyle?
Yeah.
Yeah, so refresh your connect year 4 inquiries page, and it's at the very bottom. It says inquiries year 4 2020.
Okay.
Got it?
Yes, ma'am.
I'm gonna put it up here too, and I'll share it on the screen. Okay. And I did it in PDF, but then I changed it and did it in Word because I think we're probably going to end up typing on this one. So I left it where I could type on it. Okay, so I gotta share this with Kyle, so hang on one second.
You said it's at the bottom of where? Which tab? Hello? Hello?
Okay.
Can you hear me now?
Yeah, I think my dropped, Kyle, so I'm gonna reshare this with you. Okay. So, you know, probably we won't need to do anything with that, but we'll look at it. Okay, so the short-term investments, they have 3 because they sold one last year. This year they sold Italian on March 19th, and as Maury noted, he did not record anything on the market adjustment, so we will need to go back and look at that. And then for Coverdale and United Health, he didn't do any revaluation at the end of the year for those 2, so we'll have to go back and look at that. We're going to do that today. We're going to do the short-term investments and the equity method today, since those are the 2 things we've been working on. Hopefully we'll get everything done because we still have that one last problem on the equity method problems to do as well. So we'll get as much done of that as we can. Of course, he's not going to consider deferred taxes. Here's the pension plan. We're not even going to touch that until we get to the pension. How do we do pensions? Claiborne. So as I mentioned, she resigned her position, Rachel did, on the board of directors. So obviously, I mean, I think you guys know we're not going to be able to continue to account for that as an equity method investment. It does not meet the criteria because they no longer have any significant influence or strategic purpose. So even though they still own 25%, there's no relationship. We don't want to account for it using the equity method. So we'll talk about how we're going to switch that over. But Meacham obviously is an equity method account, so we will do equity method for them. The lawsuit, as I said, Larry Cullen passed away, and Mike didn't record anything about the lawsuit because he wasn't sure what to record. Nobody asked about the finance piece. Again, that doesn't mean you didn't on your homework, you just didn't in class. So remember in year 3, the building and shop, and let me just, if you don't mind, let me just take a second and revisit that. And actually, it kind of looks kind of nice now in here. It kind of helps separate it out. So, Sandy, in year 1, they leased a building and they separated it into like the part where they do the actual website work, and then they have an office space. Okay, so this is actually pretty good the way this is split. Is we could think of this as the shop and this is the office. So the office space is much smaller than the shop space. It's about 5/6 and 1/6 is how the square footage plays out. And the reason that that's important is because all of the expenses related to the shop are going to be in cost of goods sold. And all the expenses related to the office are going to be in selling, general, and administrative. Okay, so utilities have to be split. Rent has to be split. All of those things have to divide between them. So that's one thing that we have to think about as we, Mike's pretty much got that down and does that for us. But in year 3, they decided that they were doing a short-term lease. It was like 5-year lease, which we call an operating lease. Okay. Then in year 3, they decided they really liked the location, and they renegotiated the lease to be a 20-year lease. It then met the criteria for what we call a finance lease. The video for that is in that where I've got old videos. Okay. So the video about how to do the accounting for that is down in there, okay? And your classmates may decide they want to go back and rewatch that as well, because we only did 1 year of that in year 3, and that was it. Yeah, it's probably just called leases. So year 3, they renegotiated, so now they have a finance lease. And we are going to go back and practice from the very beginning how to do finance leases, so it's going to help you, but you still may want to go back and watch the video before we do that. And then Mike didn't do any of the required journal entries for that, so we're going to have to do those. Okay. Nobody asked me about the inventory, which I was kind of surprised. Again, you may have asked it on your homework, but just didn't ask me in class. But basically, and I know this is, they're selling flash drives. I know it's not, I know with everybody being on the cloud, it's not very exciting, but I'll maybe in another year I'll update things, but it was not going to be this year. Got enough going on this year. Okay, so they're getting them from a company called Computers and More, and we'll deal with all of that because they're using FIFO. We got to make sure that, and you may have noticed that Mike didn't record cost of goods sold for those guys. That's a problem for sure. They're all still sitting in ending inventory, even though they're not a big, even though sales revenue is not a big proportion of their, as compared to their service revenue, we still want to get that right. And he didn't record cost of goods sold at all. So we'll have to go back and deal with that. So we're going to go back and revisit FIFO, LIFO, weighted average, move, how to do it when it's periodic versus perpetual, all that fun stuff. And then we're going to introduce lower of cost or market, which you guys probably haven't seen yet. Yeah. Yeah, I don't expect you to get every single one of them, Haley. I mean, I don't know that I've ever had anybody who got every question. Okay, I mean, that would be pretty hard to do. That's a good question. It'll be between years 4 and 5. So my guess is it probably will be pretty close to midterm. I know last year it got pushed because we did 2 years and then we did a test last time. This time we only have 2 years worth of WebWorks to do. And I won't say it's perfectly midterm, but it's probably pretty close to midterm. So the midterm itself will probably be pretty close to midterm, which is October 7th or 6th is the true midterm point for this semester. So it'll be somewhere in there, and I can I can probably give you an idea. No, that's okay. I've got it on my schedule. I don't put it on the syllabus because if we end up needing an extra day before your presentations or something like that, I want to give it to you. But I can probably tell you at least reasonably close. Hang on one second. Okay, so right now I've got it at approximately October 14th. Okay, so that's pretty close to midterm. But don't put that down and say we have a test on October 14th, okay? Because if we need an extra day in here to do something, I'm gonna take it. So, but that should be reasonably close. Yes. Yeah, the test is actually, it's gonna look exactly like WebWorks. It's just gonna be much shorter. So it'll be an accounting cycle but this time you'll do the journal entries, you'll do the adjusting entries, and then you'll do like an income statement balance sheet. That's all we have time for. And oh my gosh, I don't know how we're going to do it in an hour. I'm going to really have to, I'm going to have to seriously think about how I'm going to revise it because it's always been an hour and a half. And then most times people stayed. We could stay as long as we wanted because nobody cared, right? Now people care. It's just the accounting cycle, and it'll include like short-term investments and equity method. Yeah, I mean, you guys did fine doing it virtually before. I'll have to think about it. I hadn't even thought about it really, but in order for it to be fair, Sandy, because I try to make it look like what we're doing with WebWorks so that it looks like what you've been doing. Okay. I'm happy to share with you the test from 3301 since everybody else has seen them. It's going to look exactly like those. I just make them harder each time. I just add things to them each time. Okay. So yeah, I'll have to think about it, what we can do. No, that's okay. It's not a problem at all. I just gotta think about it. I know, I know. Well, we do. We all have a lot to review. Okay, so don't worry about that. We all have a lot to review, and we are going to review everything. Okay. All right. So the bonds, that'll be a new thing. That's probably the next thing we'll do. And bonds are really not overly complicated, so I think we'll be okay there. And then just because I mean, there was no way for you guys to know this, I just threw it in as a question. Are there any other items that we should be aware of? So, WebWorks purchased new vehicles this time, and they purchased them together, which is not unusual. We call that a basket purchase, and companies do that all the time. They're going to purchase a fleet. They're not just going to purchase one vehicle necessarily. So in this case, they purchased two vehicles together, and they paid one price for it. So the question becomes, how do we separate that out between the two vehicles, right? Because we can't put them together in the account, because we have to have a subledger that has each different asset. So Mike didn't know what to do, so he actually didn't record anything at all. He hasn't recorded the vehicle purchase or the depreciation. So cash is not even right this time. Cash is usually right. Cash is not right either. So we'll figure that out later. That's actually pretty easy too, but Mike just wasn't sure what to do. So you'll have fun explaining to Rachel that cash is not even the correct on there this year. Bless Mike's heart. Okay. So let's go ahead. You guys have your journal pulled up, and let's go ahead. And I'm gonna stay on the Word document for a little bit, Kyle. So I'm not gonna switch over yet. Let's go ahead. Okay. So but when I do, I promise I'll remember to share the screen for the Excel document. Okay. All right. Okay. So we're gonna go ahead and start with the short-term investments. Okay. And my advice is never to look and see what Mike did. Like, don't go back and look at Mike's. Start with what you know. So the first thing we're going to do is we're going to do the calculation of the sale of Italian. Is it not? Oh, yes. I'm sorry. I muted it to look at something. Yes. Thank you for the reminders. Kyle could see it. Okay. So for the sale of Italian. So what I would like for you to do, and you're welcome to go back to the example that we did in class on Monday of the sale of the short-term investment, if that would help you. Remember, we did that on the PowerPoint. I would like for you to figure out what journal entry Mike should have made to sell Italian on March 19th, or March of 19, I guess is probably what I should say. Maybe it is March 19th of 19. I can't remember. We'll just say it is March 19th of 19. So what's the journal entry that Mike should have made on March the 19th for the sale? Don't look at what he did, because you know it's not right, and it'll probably just confuse you. So go back to, you're going to start with the fair market value, right? We always start with that. So on that day, the fair market value was $15,890. Okay. But from that point on, I'm going to let you figure out what's the next thing I'm going to put there, and then make the journal entry. All right. So I'll give you a few minutes to do that. Okay, so we'd have to go, I guess we'd have to go all the way back to year 3 to figure out, well, you can see it on there, what the market adjustment, you can probably figure out what the market adjustment should have been, but just so you have it, because the market adjustment we know is portfolio. The piece of the market adjustment that relates to Italian is currently a 160 debit. Okay, that should help you. So if I were to look at the market adjustment account right now, it's a 2060 credit, but 160 debit is the amount that relates to Italian. Okay. So instead of you having to go all the way back to year 3 to figure that out, although you could just look at the difference here, and you can see that it's 160, but still, it just to make it easier on you, the market adjustment is a 160 debit currently. Okay, for Italian. right. So when we sell, we compare the fair market value to the mark to market, which is the amount that it was selling for on the last balance sheet date. So in that case, it's going to be the market value on 12/31/18, which was 14,800. And that gives us our realized gain or loss on the sale. In this case, it's a gain because it's the mark to market's less than the fair market value. And that is going to be $1,090. All right, so the journal entry then would be, actually, let's just make that on the journal, okay? So Kyle, I'm switching you over to the journal here.
Okay.
All right. So Sandy, the way I usually do things, we go ahead and we pull up the journal, and I just start something like corrections so that I know where my changes start, okay? All right, so this is going to be, first thing we need to do then is we need to reverse Mike's incorrect entry, right? Yes. Zoom in. Yes. I will certainly try. Okay. Yep, I can do that. All right. And then, yeah, I'll make it bigger too. Why is that not happening? Not letting me zoom in. Yeah, you're right. That's exactly what it was. Thank you. It is. You are so correct. And I'm trying to use my extra mouse over here. So, okay. Is that better? Tyron, can you see it? Okay. Okay. So corrections, reverse incorrect entry for Italian. Okay. So let's go up and see what Mike did. Okay. So he debited cash. That's correct. But then he credited short-term investments and credited recognized gain loss and did not include the market adjustment, which we know has to come off as well. So we'll reverse him by putting the short-term investment and the gain back on and taking off the cash. And Sandy, you don't have to, when you type in here, you don't have to put in the account. The macro will fill that in for you, okay? So all we do is we put the account numbers. Did you guys deal with like charts of accounts and stuff? Okay. So the ledger has, basically a chart of account is simply an account number with the account itself. So each account gets an account number. That's called a chart of accounts. So cash, for instance, is 101. So if you put in just the number itself, when we process the journal entries, it'll fill in the account name for you so you don't have to type it. It's really nice, okay? And then debits and credits go just like they normally would. So debits are on in column D and credits are in column E, okay? All right, so let's reverse Mike. So we're gonna credit short-term investments for 14,640. He originally credited the gain for 1250, which we know is not right. Oh, not right. And we will take off the cash of 15,600, 15,890. My glasses. Okay. So normally, Sandy, what I do is I type in a few things before we process, but I'm going to process this time so you can see what it does to it. So you can see it filled in the names. Okay. All you have to do is process it. As long as macros are enabled. Remember we talked about that? Yeah. So as long as your macros are enabled, it should process it for you. All right. So now we can put in the correct entry. Okay. So the cash was correct, right? That Mike had recorded because they're going to get that full 15,890, which is the fair market value. And then they are going to take off the short-term investments, which is 14,640. They sold it. But the realized gain that we just calculated was 1090. So let's record that. So 808. Gains are credits. That doesn't balance, but that's because we have to remove the market adjustment that relates to Italian imports. That is account 119. And it had a debit balance of 160, so we're going to credit it for 160. Oh, yeah. Record the sale of Italian imports. Okay, so let me process that so you can see it. And there it is. All right. So I think we have just enough time left to revalue the two remaining short-term investments. We're not going to get to the equity method, so I'll probably have you do a little bit of equity method stuff for homework so that we can kind of hit the ground running with the equity method when we start back on Wednesday. Okay, Kyle, I'm going back over to our document, okay?
Okay.
No. Probably an easier way to do this, but okay. So now what I want you to do, and hopefully we can finish it up. I think we can. Is to record the revaluation of the other two. So revaluation of Coverdale and United Health, and we'll do those together, right? We'll do it as a portfolio approach. So you can do that as one thing. So it also starts with the fair market value of those two stocks, which would be the 8,700 and the 7,950. Which would be 16,850. So that's just the sum of the 8,700 and the 7,950, which is their market value on 12/31/19. All right. So I'm only going to be able to give you about 5 minutes here, but you can go back again to what we did last Wednesday if you want to, and figure out what would be the journal entry for the revaluation of Coverdale and United Health on 12/31/19. Okay. Don't want to run out of time, so go ahead and get this finished. All right, so when we're revaluing, we compare to cost. And the original cost was, I'm sure I have it on here without having to calculate it out again. 17,240. If you look up, it's the 8740 plus the 8500, the original cost, because now Italian is gone. So it's just Coverdale and United Health added together. So what did I just say? 17,240. And that is our target market adjustment, right? It's not a gain or loss. That's our target market adjustment. So it's obviously going to be a credit because the cost is greater than the fair market value. So our target market adjustment is a credit of 590. Did I add something wrong? Should that be 16,650? Nobody caught me on it, or maybe just didn't say anything. It's like, yeah, she'll figure it out if she eventually, right? Yeah, it should be 16,650. Sorry, guys. Can't even add on a calculator today. Yeah, no. Oh my gosh, I'm sorry. Okay, so that's going to throw off everything you did on your journal entry. I apologize. So the target market adjustment is going to be a credit of 590. Because whenever it's a negative, it's a credit. Okay. So let's do our market adjustment T account. That makes it blue, so that makes it hard to see. Sorry. I think, let's see, I can change it to black. There we go. Makes it a little bit easier. Okay, so there's our T account. So let's start from the beginning. What was in that T account at the end of last year? So it was 2060 credit. And Kyle, I just pulled that from the journal, the beginning balance in the journal, okay? All right, so 2060 credit. And then we just credited it for an additional, oh, let's try, it's not on here. We just credited it for an additional 160 in our previous journal entry. So I need to add that in. Okay, so currently it has a balance of a credit of and you can see it in the journal. Hopefully it's correct. 2220. Okay. So the question is that what I want it to be? No, right? I want it to be a credit of 590. So how am I going to get it there? Well, I would normally ask you, but I messed up, so you wouldn't have had that number to use. So we have to go from a credit of 2290 to a credit of credit of 2220 to a credit of 590. So we're going to debit it for 1630. Okay. So we're going to debit for 1630 to get to a credit balance of 590. Does that make sense? Okay, so it's too much of a credit balance, right? It should be, it's a credit of 2220. We want it to be a credit of 590. So to get it to be a lower credit balance, we have to debit it for the difference of 1630. Okay, we got 3 minutes. We can do it. Okay, so Kyle, I'm going back to the
Okay.
Okay, one more time. All right. So, revaluation of short-term investment. All right. So if I have to debit the market adjustment, that's going to be a debit of 119 for 1630 is what we just calculated. So that means there was actually an unrealized gain on the stock, even though it's still selling at a loss. It's not as much of a loss as it was selling for at the end of 18. So it's actually gained back a little bit of what it lost. Let's make sure we have the right account number. So unrealized gain or loss on the short-term investments is account 807. And we will credit that for 1630. Process it. And there it is. Okay, and so if we look at our asset ledger, you can see that the market adjustment is now a negative 590 or credit of 590, which is exactly what we want it to be. Okay. Good. All right. With 1 minute to spare. Okay, so make sure you save this because we're going to pick back up with it on Wednesday. And I'm going to give you a little bit of homework on just what I would have had you do in class if we could have had another half an hour. I really miss our extra half hour, guys, like crazy. And I think you do too. I know. I don't, it's okay in 2200. I can deal with it with them, but in here it's really hard. So I'm just going to have you look at Meacham and figure out what Mike should have done. And they do have a patent that was worth more. And so WebWorks did pay more. So you're going to have to do that amortization entry. So I'm just going to have you try. You don't even have to turn anything in. Just going to have you be ready for class on Wednesday by trying to figure out what are the 4 journal entries that Mike should have made for Meacham. Don't pay any attention to what he did. Okay, it'll only confuse you. Just figure out what are the 4 journal entries that Mike should have done for Meacham, and then we'll start with that on Wednesday. Okay? Yeah, all those videos are there. All the video. I tried to go. You guys can go back to 3301, but I also posted a bunch of them on 3302 so that Sandy can see them, so you can watch them either place. Okay, Kyle, I am stopping recording, and I will hopefully see you on Wednesday. Okay.
Okay.
All right.
Bye.
See ya.